Okay, welcome viewers. This is question and answer program on chapter 6 of financial management. The direction is choose the best answer. Question 1. Leverage primarily means using dash a fixed cost to raise return, b variable cost to reduce risk, c current asset to pay debt, d short-term fund for equity. The answer is A. Fixed cost to raise return. Question number 2. Operating leverage arises from A. Fixed financial cost, B. Fixed operating cost, C. Variable production cost, D. Total sales income. The answer which is equal to B. Fixed operating cost. Question number 3. Financial leverage is related to dash A. Sales policy, B. Production method, C. Financing decision, D. Inventory control. The answer is C. Financing decision. Question number 4. When contribution equals fixed cost, the firms operate at dash A. Break-even point, B. Margin of safety, C. Loss region, D. Maximum profit. The answer for this question is A. Break-even point. Question 5. If degree of operating leverage is high, it implies A. High operating risk, B. Low business risk, C. Stable profit level, D. Low fixed cost. The answer is A. High operating risk. Question number 6. Composite leverage measures the effect of change in dash A. Sales on earning, before tax, B. Earning before interest and tax or earning per share, C. Cost or earning before interest and tax, D. Tax on profit. The answer is A. Sales on earning before tax. Question number 7. Trading on equity refers to dash A. Using equity to pay dividend, B. Using fixed debt to raise earning per share, C. Reducing interest to raise earning before interest and tax, D. Replacing debt with equity. The answer for this question is B. Using fixed debt to raise earning per share. Question number 8. In financial leverage, risk increases when dash A. Variable cost decline, B. Sales volume grows, C. Fixed charge rises, D. Equity ratio increases. The answer is C. Fixed charge rises. Question number 9. The degree of financial leverage measures dash A. Percent change in earning before tax to change percentage change in earning before interest and tax, B. Percentage change in earning before interest and tax to percentage change in earning before tax, C. Percentage change in sales to change in earning before tax, D. percentage change in earning per share to percentage change in sales? The answer is A. Question number 10. The combined leverage equals dash. A. Degree of operating leverage times degree of financial leverage. B. Degree of operating leverage divided by degree of financial leverage. C. Degree of financial leverage minus degree of operating leverage. D. Degree of financial leverage plus degree of operating leverage. The answer is A. Degree of operating leverage times by degree of financial leverage. Question number 11. Question number 11. Sales which is equal to 1 million, variable cost which is equal to 600,000, fixed cost which is equal to 300,000, operating leverage is equal to dash. To calculate degree of operating leverage which is equal to contribution over earning before interest and tax. To calculate this, we have to know first contribution and earning before interest and tax. So the contribution which is equal to sales minus variable cost. Sales is 1 million, variable cost is 600,000, so the result will be 400,000. The earning before interest and tax which is equal to contribution minus fixed cost. So the contribution is 400,000 minus the fixed cost is 300,000, which is equal to 100,000. So the degree of operating leverage which is equal to contribution 400,000 divided by the earning before interest and tax, that is 100,000, which is equal to 4. So the answer is D. 12. Earning before interest tax is 200,000. Interest is 50,000. Financial leverage which is equal to dash. Financial leverage is equal to earning before interest tax divided by earning before tax, which is equal to 200,000 divided by 150,000, which is equal to 1.33. Okay, so the answer is B, 2.5 half. Question number 13. Contribution is equal to 250,000, earning before interest and tax 100,000, operating leverage which is equal to this contribution 250,000 divided by earning before interest and tax 100, which is equal to 2.5. So the answer is C. Question number 14. Earning before interest tax is 180,000, earning before tax is 120,000, financial leverage which is equal to dividing this earning before interest tax by 120,000 earning before tax, which is equal to 1.5. So the answer is C. Question number 15. DOL which is equal to DOL which is equal to 4, DFL which is equal to 3, the combined leverage which is equal to combined leverage CL which is equal to DOL times DFL which is equal to 4 times 3, 12. The answer is D. If sales rise by 5%, DOL which is equal to 4%. Change in earning before and interest tax is equal to 4 times 5, which is equal to 20%. See, earning before interest tax rises 10%. DFL, which is equal to 2.5%, and the percentage change in earning before tax is equal to dash 10 times this 2.5 is equal to 25%. So the answer is C. If DOL, which is equal to 5, and the sales increase is 6%, then percentage change in earning before and taxes is equal to A 20%, B 25%, C 28%, D 30%. So the answer, which is equal to 30%, D. Question number 19. Sales increase 3%. Degree of operation leverage, which is equal to 6. Degree of financial leverage, which is equal to 2. Percentage change in earning per share is equal to dash. So the change in earning per share, which is equal to percentage change sales times degree of operation leverage times degree of financial leverage. So change in sales, which is equal to 3 times degree of operation leverage 6 times degree of financial leverage 2, which is equal to 36%. So the answer is C. Question number 20. If contribution is equal to 500,000, if fixed cost is equal to 400,000, and the interest is 50,000, the degree of combined leverage is equal to calculate this. First we have to know earning before interest and tax. So earning before interest and tax, which is equal to contribution minus fixed cost, that is 500,000 minus 400,000, which is equal to 100,000. And the next is we have to calculate the degree of operative leverage, which is equal to contribution divided by earning before interest and tax, which is equal to 500,000 divided by 500,000 divided by 100,000, which is equal to 5. To calculate degree of financial leverage, which is equal to earning before interest and tax divided by earning before interest and tax minus interest, which is equal to 100,000 divided by 100,000 minus 50,000, which is equal to 100,000 divided by 50,000, which is equal to 2. So degree of combined